Hey, welcome to the Speculation Lab. A well-known trader, the Inner Circle trader with over 1 million subscribers, has shared a highly effective ICT trading strategy on Instagram that he personally uses. According to him, anyone who adopts this strategy can achieve financial freedom in just 90 days, no longer needing to stick to a 9-to-5 job. It's a very long video, but I can explain it to you in just 5 minutes. I'll also include a checklist for applying the ICT strategy to cryptocurrency market trades in the video description. This way, you can easily spot entry and exit signals that match the trading rules during your usual trades. The first step in trading is to identify important time periods suitable for trading. The cryptocurrency market is a 24-hour, non-stop trading market, but most of it consists of random fluctuations that are not worth engaging in. Many traders are accustomed to keeping their eyes glued to the screen, fearing they might miss something if they look away. This is actually a very unhealthy trading state and makes one easily affected by market fluctuations. I have observed 4 time periods where fluctuations and characteristics are often more distinct, and these are worth paying special attention to. The first one is from 7 to 9 a.m. Beijing time, around the universal 8 o'clock daily line closure. Bulls and bears often concentrate their efforts during this period. Additionally, as most traders are concentrated in the Asian region, these traders, having just woken up, tend to be more emotional. Big players often choose this time to drive retail traders' actions, creating conditions ripe for chasing rises and plummeting falls, making it easy to spot the day's high or low points. The second period is from 3 to 5 a.m., around the first closure of the 4-hour K line of the following day. Traders in Asia are mostly resting at this time. Big financial institutions aiming to harvest retail traders with the least cost often choose this time when most people find it inconvenient to add margin. They concentrate on triggering stop-loss orders or directly push a portion of funds to the brink of liquidation. The third period is from 11 p.m. to 1 a.m. when many day traders decide whether to close their positions before resting. Big players often manipulate the market during this time, waiting for the 3 to 5 a.m. period to harvest. Particularly after significant fluctuations, this period often sees a surge followed by a drop, and we can use this pattern for short-term trading. The fourth period is from 4 to 6 p.m., which is morning for American and European traders. However, due to the limited number and capital of American and European traders, market fluctuations are often not very pronounced. After identifying the suitable trading periods, the second step is to find the recent high and low points on the 30-minute chart before the trading period and mark them with a straight line. This position is also known as the liquidity area, which is where a large number of unexecuted buy and sell orders are located in the market. This is usually a hot spot for buying and selling transactions, and we need to wait for the price to reach near this liquidity area to consume its liquidity. The third step is to switch to the 5-minute chart and wait for a change in the trend structure. Taking Bitcoin as an example, after the price continuously declines to the liquidity area, we switch to the 5-minute chart. If the price stops falling and breaks through the high point of the previous wave directly, it indicates that the structure of lower highs and lower lows in the downtrend has been broken and the price is likely to shift from bearish to bullish. Once the conditions are met, we move to the fourth step, finding the fair value gap, FVG. As previously discussed, there are generally 3 types, but in the cryptocurrency market, we mainly use the first type. This FVG pattern is composed of 3 candlesticks, where the body of the middle candlestick and the shadows of the adjacent candlesticks do not overlap, creating a gap. This gap indicates a sudden decrease in market activity in this price range, forming a unidirectional gap that might be filled in the future. After being filled, there's a high probability that it will continue in the direction of the trend. The fifth step is to find entry and exit positions. If the price range of the gap is large, when the price returns to the gap area, we can enter long positions at the upper edge or middle area of the gap. Stop loss can be set below the FVG gap or near the previous low, and take profit can be set at a fixed ratio or near the previous high. The trading rules are very clear, and now let's look at a brief example. The first step to enter a short position is to identify a suitable trading period, such as marking the period from 7 to 9 a.m. The second step is to find the high and low points of the wave on the 30-minute chart before the trading period. The third step is to switch to the 5-minute chart after the price continuously rises to the liquidity area. When the price encounters resistance and falls, breaking below the low point of the previous wave, it indicates that the structure of higher highs and higher lows in the uptrend has been broken and the price is likely to shift from bullish to bearish. The fourth step is to use the rectangle tool to draw out the fair value gap, FVG. When the price bounces back to the FVG gap area, we can proceed to the fifth step of setting entry and exit. Enter a short position at the upper edge or middle area of the gap with a stop loss set above the FVG gap or near the previous high, and take profit can be set at a fixed ratio or at the position of the previous low. As can be seen, this trade quickly achieved its take profit. ICT advocates identifying liquidity, order blocks, supply value gaps, and other areas, utilizing market structure and specific time periods to find buying and selling positions. It also combines multi-time frame analysis and risk management for trading. This is a systematic trading concept. Using this trading framework combined with some of the indicators, patterns, or strategies from this channel to form one's own trading system can be very effective. Alright, this program is just for entertainment and does not offer any investment advice. Please hit the subscribe button so you don't miss out on even more profitable trading strategies. Wishing you a good morning, good afternoon, and good evening. Bye.